Inflation keeps breaking brand new record highs, which is why life is getting more and more expensive, and the Federal Reserve Bank has just come out again and they said that they might be making some changes. So let's talk about what's going on. What's up everybody, I am Jaspreet Singh from the MinorityMindset.com, where money minds rethink rich. The 5 areas that have been seeing some of the highest inflation are cars, especially when we're talking about used cars, gasoline, meat, car rentals, and airlines if you want to go and travel somewhere. Let's start with cars. Companies are not able to produce cars anymore, new cars, because there's a chip shortage. When the pandemic first hit, manufacturers around the world shut down and these manufacturers stopped producing chips, these computer chips. Well, car companies can't get a hold of these computer chips right now because all the computer chips that were out there were used to produce new video games, new PS4s, new Xboxes, and so now car companies are struggling to find new chips. And so because of that, it's harder for car companies to produce new cars, which is making it harder for people to find new cars available for sale. And so because people can't find new cars, they've been turning to used cars. And so before, back in 2020, when there was a whole bunch of uncertainty going on, we had a huge amount of used cars available for sale. And now in 2021, in the later part of 2021, it's the opposite. We have a lot of people that are trying to buy used cars because there aren't enough new cars out there, and this has pushed the price of new cars way up. Same with gas. When the 2020 pandemic hit, the whole world shut down, so the whole world stopped using gas because people weren't driving and plants were not running, so the need for gas went way down, and so we saw the production of oil also go way down. Well, the production of oil hasn't really picked back up yet, and a lot of these oil companies haven't really come to an agreement on how much oil they should be producing, and so because we have less oil being produced right now, the price of gas is way up here. I was actually driving around the outskirts of Chicago the other day, and I'm not talking about downtown, I'm talking about the outskirts, and regular gas was $4.09 a gallon, and if you wanted premium gas, it was $5.09 a gallon. We're seeing the same issues with meat, and with car rentals a little bit interesting, because what car rental companies were doing was, back when the 2020 pandemic hit, many of these car rental companies ran into a lot of financial problems, so they started liquidating their inventory, meaning they started selling off the cars in their lot because nobody was traveling in 2020. Well, now in 2021, where you have a lot of people trying to go back to real life, trying to travel again, and you have these car companies, these car rental companies that don't have as many cars on their lots because they sold off so many, and so now you have way less car rentals out there, and a lot of people that want to rent the limited supply of rental cars there are, which is again pushing the price of rental cars up. And then we have airlines also running into similar issues, where one, airlines are having to pay higher prices for gas, and second, a lot of airlines are not running at 100% capacity, which means you have less flights going from one place to another. So if you have half the flights going from New York to California and the same amount of people want to go from New York to California, well, this is what's pushing the price of flights up because there aren't as many seats going from one place to the other. And I haven't even touched the housing market because we have other videos where I talk about that, but as you all know, we're also seeing a huge increase in housing costs, and I don't care if we're talking about rentals or owning a home, the price of housing across the board has been skyrocketing because of all the other issues that I talked about. You have a lot of people that want to go out and buy a home or rent a home, and not that much inventory available for sale. This is why it's no surprise that the new July inflation report that just came out said that we broke another 12-year record with inflation. So let's talk about what's going on and what the Federal Reserve Bank says about this, because they have some interesting comments on this and what might be coming in the future. But before we get into that, I need you to do me a quick favor and smash the thumbs up button below. And if you haven't already, be sure to join our brand new free Discord server called the Guac Talk Community, because as we all know, extra guac is truly a symbol of extra wealth, and in this community you can chat about all things minority mindset. You can chat about the stock market, the real estate market, the cryptocurrency market, and all things building wealth. This community is completely free, and if you want to join so you can network with and chat with other minority mindset thinkers, I'll put the link to how you can join our Discord server in the description below. So the Wall Street Journal did a very interesting write-up on the current state of our inflation that we're seeing right now, and what they said is that yes, the inflation that we saw between July of 2020 and July of 2021 is record-breaking. The good news is the amount of inflation that we're seeing month over month, so between June to July, has decreased. So what we saw between May to June was very high, and what we're seeing from June to July is high, but it's not as high as it was. That might be a little confusing to understand, but the article had a really good analogy that I think you'll appreciate. So what it says is that between May to June, our economy had 104 fever. Now between June to July, we saw the economy go down to 101 fever. It's still a fever, but it's not as bad as it was. What that means is we're still seeing the price of things around us grow very quickly. It's just not growing as fast as it was a little while ago. But one of the reasons that we see the inflation that we have right now is because the value of our dollars are being diluted. This is what inflation is. Inflation is when the value of your currency drops, which causes the price of things around you to go up. And one of the things that causes this type of inflation is when you have more dollars out in circulation, because when there's a lot more dollars out there, the value of each dollar that you have goes down. The Federal Reserve Bank is the central banking system in the United States, and they are the entity that controls our monetary supply. Now, the interesting thing about the Federal Reserve Bank is that although it's called the Federal Reserve Bank, it's really not a bank because you and I can't go there to deposit money. It's not a reserve because they don't keep cash reserves anywhere, and it's not federal. They even say so on their website. They are a private entity. But the Federal Reserve Bank has the ability to control our monetary supply because they can work with the Treasury Department to print money, and they can also control interest rates, and both of these things have a big impact on the inflation that we see. When you print more money and you inject this money into our economy, this creates more inflation because now you have more dollars floating around, and when you have lower interest rates, this also creates more inflation because now people are more likely to go to the bank and borrow money, which adds more dollars into our economic system. So when you have more dollars in the economic system, the value of each dollar that you and I have goes down, which in turn causes the price of things around us to go up. So the Federal Reserve Bank has been working with the government to increase inflation because that will allow the economy to grow, because they want to get more money, more dollars into the hands of people and businesses, that where businesses can go out and hire more people and create more jobs. That way the economy can grow, and that will get the economy and the system running again. Now this is kind of like a tug of war, because on one hand you have a healthy amount of inflation where you're adding more dollars into the system, people are making more money, the economy is growing, which is good. But on the backside and the risk is too much inflation, because at the same time while you're doing that, the value of our dollars keep losing value. And so if you do too much inflation, well, now the dollars that you have are worthless, or they're not worth as much as you'd hope. And now the people that have been saving money and working hard to earn money are not able to afford their regular life because the price of things are so much and people aren't making enough money to afford the cost of living. So this is the tug of war that the Federal Reserve Bank has been dealing with. And what they say is that before they start to slow down inflation, they want to see two things happen. They want to see inflation hover at around 2% a year consistently, and they want to see the job market come back. Now, for regular people who have regular costs, we've been seeing this 2% inflation. But the Federal Reserve Bank has their own indicator of what they believe is 2% inflation. And just recently, after the most recent inflation report, the Federal Reserve Bank says that they think that we're hitting around this 2% inflation figure. Let me read you a quote from a Yahoo Finance article so you know what I mean. Under the Fed's current policy guidance, rates will rise, quote, when inflation hits 2%, which I think that you can argue it already has. And it looks like it is going to sustain there. That quote is from a speech given by a president of the Federal Reserve Bank, so it sounds like the Federal Reserve Bank is finally starting to think that we're hitting around 2% inflation. Well, back in 2020, the Federal Reserve Bank created this rule where they said that they were not going to stop the money printing, and they were not going to raise interest rates until we saw inflation hit at least 2% and even exceeds 2% a little bit a year. And they also want to see employment hit the maximum amount possible. But according to what the Federal Reserve Bank says, the thing that's holding them back from making more drastic action is they're still worried about the employment market. They're not seeing enough people go back to work, and because of that, they're still scared to raise interest rates, and they're still scared to slow down their money printing. However, there are some new developments on that money printing side. The Federal Reserve Bank, at the time we're recording this video, is printing right around $120 billion every single month, and they're using this money to buy up bonds and other things to keep our markets afloat. So essentially, this is a $120 billion monthly bailout going into our markets, so investors feel more comfortable investing their money into things like bonds and stocks. Originally, the Federal Reserve Bank kept saying that they're not going to raise interest rates until at least 2023, and they don't plan on stopping this money printing until something around then, or at least much later, until the economy has fully stabilized. But now you're starting to hear something different. You're hearing that depending on what happens in August and September, we could start seeing this money printing start to taper away. The reason why the Federal Reserve Bank doesn't just want to stop these asset buybacks right now is because that's what they did after the 2008 crash. After the 2008 crash, the Federal Reserve Bank was also printing money every single month to buy back assets, to keep investors confident, to invest their money back in the market. And then when they suddenly stopped that, it created a small stock market crash, and they labeled that the taper tantrum. And so the Federal Reserve Bank says that they're worried about causing another taper tantrum crash. And so to prevent this crash, what they're saying is they want to be more cautious and they want to slowly wean their money away from the market. That way investors don't see another crash. Now, if we put everything that's going on in the economy aside for a second and just take a look at this, this is why financial education is so important, because you have the Federal Reserve Bank and the government working to make sure that investors are not scared to invest their money. What does that mean? So if you are financially educated, you have the government and the Federal Reserve Bank on your side working to bail you out, to make sure that you're okay. This is why financial education is so important, because you don't want to be one of the people that is paying the cost for this. You want to understand the system and you want to understand the game. That way you can win in the game, because so many people are not financially educated and they're playing in a game where they don't even understand the rules. This is why you want to be financially educated. That way you can make smart decisions with your money, and that way you can be the person that's getting taken care of instead of being the person that's just paying the price. This is what financial education is all about. And if you want to learn more about this kind of financial education and how to manage your money and invest your money the right way, that way you can build your wealth, we have a free guide on money management and investing that you can read for free when you sign up for our daily newsletter. So if you want to read our free guide and build that financial education, I'll put the link to how you can download this free guide in the description below. Now, the Federal Reserve Bank and the government have been worried about the inflation that we're seeing, because time and time again you hear all the officials saying that the inflation that we're seeing is transitory, but at the same time they always kind of couple that with the fact that they say that inflation is a lot worse than what we expected and it could last longer than what we expected. So the Federal Reserve Bank has been worried about the inflation that they're seeing, which is why it's interesting to see that they're now finally talking about doing something about at least the money printing, and now they're saying that there's a chance that they could start raising interest rates a little bit sooner. They still say that it's not going to happen in 2021, but now you're starting to hear talks of potential rate hikes on interest rates in 2022. Again, the Fed keeps saying that the reason why they're not willing to take more action to help slow down inflation right now is because of the labor market. They said that finally we're starting to see some inflation, even though it looks like everybody else has been seeing this inflation for a long time. But the Federal Reserve Bank says they're finally starting to see the target inflation that they've been hoping for. But the issue is that they're not seeing the employment market go to where they want it to be. Every single industry right now is struggling to find employees, while at the same time, we still have millions of Americans that are out of a job. So it's kind of a weird dilemma. Yahoo Finance interviewed the CEO of a trucking company, and what he said is that this is the worst trucking shortage that he has ever seen. The CEO then went on to say that they may need to increase wages by 20 to 30% if they want to keep prospective drivers, but the issue is that the company can't afford to pay that much more money right now. This is a dilemma that you're seeing not just in the trucking industry, but every single industry where companies are looking to find work. And a lot of companies have raised how much money they're paying for their new employees, but the problem is sometimes this pay increase is still not enough to attract more employees. And so companies are having to decide, okay, do we pay even more money even if we can't afford to pay this money, or do we just not have an employee? So this is creating like a whole cyclical inflation. So you have the price of things going up, and when the price of things go up, people need to make more money in order to survive. If people want to make more money, companies have to pay you more money. For companies to be able to afford to pay you more money, they're going to have to earn more money. For companies to earn more money, they're going to have to raise their prices. If companies have to raise their prices to get their products, that means they're going to have to charge you more money. If you have to pay more money, that means companies have to pay more money, and on and on and on and on and on. So it starts to create this real inflationary spiral until something happens to slow it down or to break it. The worry is that up until now, people have been able to afford the higher prices of things because over the last 18 months, people haven't been spending all of their money, although recently people have started to go out and spend, but people still have some saved up cash because they weren't paying their mortgages and they weren't paying their student loans thanks to the forbearance program. So people had some extra cash, and maybe they got some extra cash from the government, and so people had some extra cash in their bank account which they wanted to spend. And now you go out and you go shopping and you see the prices of things are more expensive, but it's okay because you got some extra cash. And then you start to see a little bit of wage increases, which is good, which helps you support these higher prices, but then the price of things keep going up higher. But now, as this free money starts to go away, especially with the unemployment benefits now starting to go away, well, now you have the prices of things way up here, and if people's wages are not able to support that, then people are not going to be able to keep buying things. And at this point, companies are going to have to make a decision. What do? Do you accept the lower revenue, or are you going to try to cut costs to keep customers? This is what a lot of money nerds are sitting on the edge of their seats for, because they're trying to see what's going to happen next. Are we going to see a lot of inflation, or are we going to see deflation happen? Because it can go one of two ways. We could see a lot of inflation if the value of our dollar really drops, causing the price of things to go up, or we could also start seeing deflation where now people cannot afford the cost of living and all the extra dollars that have been printed were absorbed into the economy somewhere, and now people can't afford things, which is going to force the price of things to go down, and now companies are going to have to lower their profits, and now companies are going to have to start downsizing, and now you can see a real shift in the way that our economy functions. That's why it pays to pay attention, and we'll be keeping you posted on our YouTube channel, which is why if you haven't subscribed yet, make sure you do that. If you enjoyed this video, here's a video on how to build wealth that I think you'll love, and while you're at it, download our free money management PDF, and as always, keep hustling. Spend money on your health. I think it was Warren Buffett who originally said this, but imagine for a second that the day you turned 16, you got your license and you were given a car, but then you were told that this is the only car you'll ever be able to drive in your life.